Welcome to People Pulse. This is our new podcast talking about talent, leadership, and people challenges for private equity firms and their portfolio companies. And if you listen in, you'll be listening to lots of experts talking about how you can drive real, genuine value creation for your businesses through your people. So listen in to find out more. In this first episode, I'm joined by Ümit, and I hope I'm pronouncing your name correctly, Ümit.
Yes.
Who's a partner in the TPC Leadership German office and has experience in private equity in various areas. So I'm going to let Ümit introduce himself rather than me ruin an introduction for you. So over to you, Ümit.
Yeah, thanks, David. Very nice to be here and excited for our conversation, bringing really two important subjects together, leadership and private equity. My career is about 20 years, and I spent that in different countries, including the US, UK, Germany, and Turkey. So I have a global career so far. The first decade was in corporate finance, and it started off with investment banking, traditional mergers and acquisitions in London. I worked for Citigroup, and then I moved into private equity. Again, pan-European private equity is what I did as an investor. I spent a lot of time originating deals, executing deals, and actually managing the portfolio companies through the investment cycle. After which, actually, then I decided once I got so close to people and business and, really saw what it means to take a business from A to B, not just advise or make a deal and then step away, that drew me into industry. And I joined Rolls-Royce in the second decade of my career as a senior leader and left the company last year. My last position was senior vice president responsible for all sales and business development in Europe and Africa. So that's kind of in a nutshell my career. I'm very excited actually to bring these two topics together today.
Good. And now you're working with TPC Leadership, focusing on leadership and how kind of you can support businesses and your previous life, let's say, with their leadership challenges and all of those things.
Exactly, yeah. I joined TPC Leadership at the beginning of this year. Very exciting to bring all that experience that I just described to you now to advise actually companies, corporates, and potentially also private equities on how to develop that leadership muscle, how to actually take that to the next level, compete with it as well. It's a key competitive advantage. We'll talk about that in a bit. Yeah, very passionate to work as a leadership development consultant now and a professional coach.
Good. Thank you, Ümit. So let's start off with a little bit of context. So your background is, as you say, rich in various areas, but really sort of private equity, where has it come from in terms of talent and, how's it evolved over time and where we are sort of today in private equity and how they can focus on talent?
So I think private equity obviously dates back much more longer than have been on this planet. The approach it by itself, but it's a very good instrument actually to take companies to the next level. I mean, if you think about it, from the Industrial Revolution to the digital age to where we are today, companies have continued to evolve, continued to expand their presence, and continue to become more innovative. And overall, you have a much everyday increasing pace in the markets in which they operate, which requires many different competitive or many different levers for companies to continue existing into the future. Technology is one of them, marketing, your product portfolio, your services. But at the end of the day, your balance sheet is also important. And this is where private equities really come in, is to help strengthen your balance sheet to take your company to the next level. Also giving a bit more of an enterprise strategy view, focusing really in a matter of 3 to 5 years to take the company from A to B. And a lot of times you have private equities actually stepping in right before very critical inflection points of a business. Say it's a family business, it's been run as a family business for a while, small to medium enterprise, wants to now go large corporate, more global. Again, private equity is always a good accelerator to come in and bring that discipline, both financially, but also strategically. And that's been my experience so far, that private equities over the years have come in and really shaped businesses, focused on growth. But we can talk about that in a little bit as well. The definition of growth has changed now over the last decades. It used to be a lot about top line growth and whatever you touch, there's growth potentials. These days, it's different. Investors are looking for different things. Employees are looking for different things. Your customers are looking for different things. And therefore, private equities also have to adapt in their value creation approach.
Yeah, and I guess, the growth point is vital for a private equity firm. That's the reason they exist ultimately. But how is sort of leadership? I mean, if you think about different types of entities, it's an organization sort of younger in its maturity where it's maybe still founder led
Yeah.
versus one that's developed a little bit more. Obviously, like we're talking about individuals, cultures, all the things that leadership is part of.
Yeah.
How do you think that's evolved over time? And where is that now versus where it used to be maybe earlier in your career?
I believe that the competitive landscape overall was, let's say, more manageable in the past than it is today. And when I say competitive landscape, I don't just necessarily mean your direct competitors. I also mean the world in which we operate in.
Mhm.
We have, I think most of us are familiar with the term VUCA, a very volatile, uncertain world, right? Complex. So the market and the world in which we operate in is becoming every day more complex, more fast-paced, where access to information, knowledge, technology is much more broad. And really to differentiate yourself, to compete is becoming much more difficult. And that private equities need to take into consideration. There's many things that surface as a result of that. But one of them that really, I think, now surfaces, which I believe in the past was more seen as a good to have, is any organization's leadership muscle, let's say, or
Yep.
leadership culture. During the times I was in private equity, majority of the value creation plan was based on hard, tangible changes in the business. Entering a new product segment, market segment, expanding into a new market, implementing new ERP systems, driving cost down, shutting this factory, shutting this and opening that. And it was very tangible, operational, strategic things and less of the, let's say, interventions and a value creation plan that are, things like culture and leadership, less measurable.
Which I guess are, softer. They were kind of seen, as always been seen, maybe as some of the softer sides of the business rather than
To
you
be
say the
honest,
sort of
I
harder
would say,
side.
I would even go as far as private equities. This is my experience. I'll put that hypothesis out there, but private equities kind of knew that organizational culture and leadership, because of the shadow they cast, and they are the absolute vital enabler of the culture, they would kind of, private equities turn a blind eye on that, and say, I'm going to ignore it as long as I can because I don't know how to intervene.
Yeah, okay.
And what private equities would do is come in and say, okay, we need to make a decision in the first 100 days on the senior C-level management team of this organization, potentially some small interventions, 1 or 2 levels down, and that's it. And majority of the time, private equities don't invest the time in understanding that management team, how to assemble it. They leave it a lot to recruiters, recruitment firms, and then kind of hope for the value creation plan execution to work.
Yeah, I see. And over that period as well, we've talked a lot about those almost external factors on this. What have the investors in PE firms, the people with the deep pockets, has their expectation changed, which has put more pressure on this area as well?
I think their expectations have changed. You have more aware investors now. We all know that the topic of ESG, as an example, continues to be relevant to investors because ultimately they're investing money that is oftentimes taxpayer money. The big pension funds that are putting, the big limited partners that are putting their monies into general partners, which are the private equities, they manage taxpayer money. And so you have a bit of a cycle where citizens, taxpayers, consumers, and the workforce itself, because you have more of the Gen Z now in the workforce, there is kind of this hard to kind of label, but underneath current that is driving continued expectations to have the right corporate culture, to have products and services that are aligned with sustainability standards, that ultimately, whatever the private equity does and the portfolio company they invest in actually adds long-term welfare and not just driving EBITDA up and exiting.
Yeah, I see.
So there is that current underneath. It is hard to believe that at the moment when you look outside into, let's say, the political landscape, there's a very different kind of narrative working there.
Hmm.
But underneath, that deep current over decades is still there. There's a more aware population in the world, stakeholders in the world, and they are driving also private equities to focus more on that sustainability, ESG element, of which people and culture is a big chunk.
Big part. Yeah, completely. And I guess, like any industry, private equity has, matured over time. They've had a lot of experience now. Some
Yeah,
firms for many years, sort of
yeah.
moving through various companies, ownership models for various companies. And I guess over time, naturally, you start to mature not just the hard numbers, like you say, but actually how the softer side of the business can really drive
Correct.
value as well.
That's right. But actually, you just said something really valuable, which is alongside that more awareness um, on overall. I'm going to put this all under the cluster of welfare, ESG. Everything is
Okay.
welfare in the world.
Yeah.
Investors are still pragmatic because they have returns to make, and with a more fragile environment out there, more competitive environment out there, they're also looking for companies and management teams that are fit to actually run businesses through such a tough environment and still make the bottom line numbers.
Mm.
There is no more luxury, David, of playing around and messing around and experimenting for the sake of top line growth. Any CEO can grow any company top line. The question
Yeah.
is, at what cost are you driving that top line?
Yeah. Sure.
And the cost includes welfare, people, ESG, organizational culture, you name it, but also tangible costs, right? Are
Hmm.
you able to run this business flexibly, adaptably, innovatively through a very, very rapidly changing landscape?
Brilliant. Thank you, Ümit. I think one thing um, around leadership that'd be interesting to dive in is around alignment or misalignment at times. How leadership of a portfolio company can align with a PE firm or with the wider business. What have you seen there? What's a good example there of kind of where it's good and can add to the value, and where it's bad and can really detract from value?
From my experience, the most challenging transitions is when it's a family-owned business transitioning
Yeah.
to an investor-owned business, potentially down the line, publicly traded. Because families have a way of running a company, and it's very hard for external shareholders that are coming in to understand oftentimes how these businesses have actually been run for so
Mm.
long.
Yeah.
Oftentimes, we underestimate when you pull one or two key figures, family owners, out of the management or the board or whichever governance structure you have, how oftentimes things can start collapsing. And that's something people underestimate, or investors, private equities underestimate. I would say beyond that, if we think of a typical private equity transaction where you have a more mature business, they already gone through the kind of family to more, standalone corporate transformation. I would say where private equities don't spend enough time on is really understanding who they want to have in those positions. You know,
Yeah.
who are we hiring as a leadership team? How do they align with the organizational culture we want to have? And how is this leadership team's makeup, their core skills, strengths, the shadow they cast? How is that going to take the value creation plan, the strategy, and translate it to concrete value creation? And again, reminder that in the value creation, it's not just about EBITDA and cash flow, it's about value creation for the stakeholder system.
Yeah. Sure.
So that's the bit. They don't spend enough time, I would say, really understanding who they want there and the makeup and how that's going to trickle down the organization and affect value creation and strategy. The second thing then is, we're humans. We make mistakes.
Hmm.
One recruitment may go well, one CEO recruitment may not go well. The other bit I would say is where private equities oftentimes make the mistake is they put the management team in place, then step away, and then it's continuous just intervention through the board versus the people side, the relationship building with that management team, the timely intervention when we see things are not going the right way is very important. And I would say a bit of a coaching culture as well of private equities. Like majority of private equity investors could really use a coaching mindset when they engage with C-level management, because you're very capable people running organizations with thousands of people, billions of revenue.
Yeah.
How do you, in a constructive, positive psychology, strength-based approach, how can you guide that management team through that investment cycle without kind of casting a shadow over their strengths or putting their strengths in the background, but more kind of bringing the best out of them while guiding them where things could be improved? You know, those honest and candid conversations. I would say a coaching mindset is best, also because oftentimes private equities are perceived as either they put the money in and step back, or they put the money in and start micromanaging, which then
completely.
you have a C-level management team that shuts down and says, okay, you know what, I'm just going to do things now to manage the private equity.
Yeah.
So they get off my back.
Yeah, I see. So they're actually maybe not doing the right things. They're doing the things to reduce the noise from above, let's say.
Yeah. So that in between, that is the art and science.
Yeah, I see.
Where I believe a coaching mindset and the candor in conversations, conflict management, things like that would really, really help. Back to leadership.
Yeah, sure. And have you seen examples where coaching mindset can really kind of, tangible examples where it can really help? Or do you think that's a massive gap at the moment that we really need to close, that sort of the coaching approach to how managing portfolio companies works?
I believe companies like TPC can really help private equities through the entire investment life cycle. That includes from how to select the management team to how to build the relationship, kind of become one team in the beginning, and then how to continue supporting the management team through the investment life cycle, how to have the tough conversations. I think there's a lot of team coaching that could be done there. And where I believe TPC Leadership could really help is, I'm thinking right now, is things like portfolio management is typically done by operating partners of a business, of a private equity. And these operating partners are different than the investment partners, because the investment partners, they do the deal, step away, stay in the board. But the operating partner is the one that actually guides the portfolio through the entire investment life cycle and make sure the value creation plan is executed. Those individuals are typically people with years and decades of experience from similar industries, and they have their own biases and ways of doing things. This is where, for example, a coaching support to them, or them integrating more of a coaching support in how they deal with C-level management and other levels, I would say could unlock tremendous value. Just training those operating partners to use more of a coaching mindset.
Fantastic. Yeah, and I mean, we have launched recently our People Edge product, which is a specific TPC leadership product directed at private equity firms and how they can deliver these services across the life cycle of the of their business as well. In terms of things like post deal, where we're losing leaders quite quickly and making transitions really quickly. Again, I read a lot about this, that this very quick decision making, and that can really affect things. I think you've touched on it, but is there anything else there that you think is really, you've seen or you think is a real challenge around how these processes are managed?
So the word that comes to my mind, David, as you just said this, post-acquisition, lots of changes. I believe storytelling is a very important skill. Because there's one thing to have an agenda as an investor, to take a company, invest in it, and then take it from A to B. That's your value creation plan, right? It has certain levers, it has strategic narrative, it has operational implications, and it has financial implications. But we have to remember that that level of depth and visibility is only there at the top management level and the shareholder level. But then you have the actual key stakeholders of a business are, beyond its investors, its employees, and its customers. What story is the private equity or the top management team of the company telling about this investment? Because that is a shock into the system. There is a big change coming. How do you tell that story in a way that engages, broader audiences, in a way that removes fear and uncertainty, in a way that preserves, if there is, psychological safety in a way that people can see themselves in that story. Not everyone will stay on board after a private equity invests. They usually change. There's much more focus on performance management and etc. But at the end of the day, you want to have a good story to tell that people can engage on. And that kind of is that red thread that goes through the investment cycle. Again, things that we call soft, but that are actually in an environment like we're in today, where storytelling is so important to make sense of the world that none of us really understand anymore.
Yeah, of course.
Yeah. So that's a skill, I would say, storytelling. Again, great things that obviously companies do, right? Is storytelling training on making sure that leaders at that level really use stories and powerful images and vulnerability as well, personal vulnerability, to engage people, to maintain psychological safety, because that is, believe it or not, as important as having a value creation plan that tells you exactly how you're going to take your EBITDA from A to B.
Yeah, exactly. So it's kind of the art alongside the science of the numbers, effectively.
That's a good way of putting it, yeah.
And what you talked about coaching, sort of how we can use coaching mindset to develop our PE execs and how they're dealing with organizations. What about at the start of the process where we're going through a recruitment process for a new CEO, for a new member of the leadership team? Do you think there's an element there around assessments and how they can really help to make the right decisions or support the right decisions? And do you think it's much more about assessment, or it's actually there's a nice balance between people kind of understanding the sort of softer sides of individuals versus the sort of harder numbers again against an assessment?
Yeah, I think it's that trade-off that a lot of the decision makers that are there making decisions about how to set up a management team, whom to change, whom to keep. I believe before that, there needs to be a very deep, and I'm going to use the word expression now, soul-searching dialogue beyond the analytical mind, going really deep into whoever is the key decision maker in the private equity about how this management team should be set up. Really deep around, what do we really want here? What is really important in the people we're hiring for this business? And it's never one thing or the other. You don't want to bring in a CEO that is a full storyteller, all people oriented, but no focus on operations or managing hard deliverables. You want to have that balance. But for me personally, right now, I would say is that kind of a as you sign the deal and it goes towards closing, between signing and closing, even before that, during due diligence, private equities could use a lot of help in actually doing that soul searching. What kind of people do we want this business to be run by? What organizational structure do we need to make that value creation plan a reality?
And going back to your point around storytelling, who are the right people to be able to engage on this journey, on this story with the people working under them?
Correct. And oftentimes these types of decisions, David, are left. I've worked in corporate for many years.
Yeah.
You hire these big recruitment firms also as an insurance.
Sure.
You get the best CEO profiles vetted from the industry. And then it comes to a judgment. The shops I worked in, the private equity funds that I worked in, they were slightly smaller than the big ones, but I'm assuming, I would say probably similar in the big ones. It's down to one or two people's judgment in the private equity, who they want to hire. It's a feeling decision.
Sure.
And that's good in one way, but it's also risky in the other, because you can have bias, you can have blind spots, you can be, this is where I would say a broader conversation with multiple stakeholders to really search deep and bring out what do we really want and how's that going to balance the human side of things versus the hard business side of things in a world that we live in, connected to the world we live in, could be of huge value. And a much more healthy base to then really say, okay, this is going to be the CEO, this is going to be the chief marketing officer, this is going to be the chief technology officer, and this is why.
Okay, let's change tack a little bit. Let's talk about a specific role or roles in the leadership team. The CFO role, head of finance, whatever that job title is within the organization, that's a tough role, and there's not a lot of people that have been through the full journey of being owned by PE, being entry and exit into PE, that kind of thing.
Yeah.
Tell me a little bit about your thoughts there on the finance team and what you've seen previously.
Probably seen the most turnover in my career and this could just be me, but I've seen the most turnover in CFO roles than any other C-level role.
Of all the leadership roles, really? Okay.
Yeah.
Interesting.
Because that's the tricky role.
Mm.
It requires a certain persona, because ultimately that's the role where kind of it is the make or break. It's what's going to balance strategic ambitions with the hard reality of the organization, the markets, the strength of its balance sheet, and so on. And it goes as far as even ethics. Now, there's been many
Sure.
cases where I've seen you get certain C-level managers and CEOs who get very ambitious, blinded, and their management team to do things where you have to have a strong personality there, strong persona who can really be the checks and balance of the system.
Sure.
To me, the CFO plays a vital role in establishing trust within the wider organization, not only internal, but also external with customers and shareholders.
And that's finance is a very specialized role, let's say.
Yeah.
And then the softer side of it, you're actually starting to, if you think about the people in finance, that you're starting to narrow the field of people who are appropriate. I guess layering on top of that, you want somebody who's going through an exit, for example, who's been through it before and understands what's the most important things and what aren't the most important things within that process.
That's right. That's right. And this is where, I would say conflict management is very important.
Mm-hmm.
How do you manage the C-level management team, the board, as a CFO? Because it ultimately boils down to, does the CFO back certain decisions that have significant financial implications? Yes or no?
Mm.
And I think, it's already been like that for decades. It's nothing new, but I would say it's going to become even more now. Probably 10, 20 years ago, we started talking about financial engineering. It's no longer just about accounting,
Mm-hmm.
making sure your books balance. It's about genuinely using financial engineering as a key competitive lever to ensure your company can do what it wants to do strategically in very innovative ways that are hopefully legal, right?
Maybe more than hopefully, but yes.
Yeah. Well, in financial engineering, we've seen case studies in the past where I think they were quite over-engineered and entered into very different territories. But this is, I think, where financial engineering is very important. Radical candor and conflict management, and really having a CFO that has strong values,
Yeah.
but is equally, let's be real, protected.
Sure.
Because if that CFO directly reports to the CEO and has no way of, maintaining their position through other checks and balances, it's very hard for that CFO to hold the line for as long as needed.
Sure. Yeah, I can understand that. Yeah. Yeah.
And I would say the last thing I would want to add is just more and more it's needed. It's becoming important that CFOs and everyone at the C-level, but CFOs also have that enterprise level mindset.
Yeah.
Beyond the numbers. Yeah.
Yeah. And just staying on the CFO for a second, we've talked about sort of capability around sort of morals, around exit readiness, those kind of things. Do you think there's any other common capability gaps for CFOs in this situation, which is fairly unique and challenging situation?
I would say innovation. Yeah. I mean, I'm going to say innovation now. And what I mean by that is this: CFOs, numbers are very important. And CFOs are obviously very focused on heads down, managing cash,
Mm-hmm.
financially engineering the business, obviously. But it's a very heads down role. And I think what's important is that CFOs also have the ability to step back and really foresee where the organization is going and what that means financially for the company. For example, data literacy, artificial intelligence, transparency. I mean, everything around data is so important these days, and CFOs really being able to stay ahead of the game there.
Mm.
Having that radar out into the market rather than the head down in the sand with the numbers within the company. Because that is important also for the exit. The quality of a portfolio company, the key criteria it needs to meet to have a successful exit with the valuation everyone expects in the market also requires that financial discipline, that rigor, that innovation, that data transparency, that data literacy. Also because the world around us is moving at a speed we no longer can comprehend. Therefore, data is very important and pace is very important.
Definitely. And I think you touched on an interesting point. Pace is the area I was going to come on to next, is around sort of today and the shifts in momentum in terms of leadership and talent strategies. Definitely, there seems to have been a big change in how private equity firms address their talent strategies. What have you seen coming out in recent years, and how do you think things have changed really overall with how they approach their talent challenges, I guess?
So I would say there is a more rigorous focus, and probably my guess is at the moment, and this is more of a guess, I
Okay.
don't have facts for it, is that with what we discussed very early in our conversation, with private equities and investors realizing that the people and leadership side of things is no longer something you can just leave to kind of good luck and destiny.
Mm-hmm.
It's something we need to take control over and invest in. In fact, it's the thing that will make strategic and financial and operational targets a reality. My personal view is that there's more focus on the people side of things, more budget on that, and I would say beyond just the C-level top management team, a more kind of hands-on overall organizational kind of scanning of what capabilities do we need, how do we establish a skill-based organization, how do we maintain agility and adaptability, etc., corporate culture. So more focus on that. And I would say as a result of that, also probably hiring accordingly senior level management that cares about this and makes this a priority and actually is skilled in shaping organizational culture.
Yeah, completely. And there's a lot of organizations now, PE firms, that have taken on talent directors, head of people, whatever the role title is. Ultimately, it's the same thing. Tell me a little bit about that and how that's changed over time in your view.
Well, I think it's just becoming more obvious that the people side of things is something no longer can be avoided. There is value creation. If you go back to the 40s, 50s, and last century, the golden years, it was much easier from what we read in history, obviously, to create value. It's becoming more difficult now. And the thing that really differentiates, if you ask most stakeholders around the world today, a good business from let's say, an average business, an excellent business from an average business, oftentimes all those roads lead back to corporate culture,
Yeah,
organizational culture. And I think private equities have a need to bring expertise inside, not only for the operational side of things and strategic side of things, but also the people side of things. No longer outsource that either to professional recruitment companies or, once decisions have been made, to the senior management team of the organization. I think it comes back to what I kind of mentioned earlier, is guiding the company through the portfolio investment cycle, also with people and talent development and leadership development and employee engagement being a top priority or an important value creation lever or enabler.
sure. Yeah. And talking around that too, obviously there's very many PE firms now of various sizes, enormous PE firms down to actually quite small or family investment firms, effectively. Where you've got a small to medium size PE firm and you're really trying to drive these talent strategies, but you can't necessarily take the step of taking on a talent director or a people director. What do you think they can do? Where can they start in terms of really starting to adopt a sort of people first type mindset to drive what we've talked about?
That's a very good question. So I think there's always ways to seek help. And in fact, I did work for a shop like that, a private equity fund like that, small to medium size, about
Mm,
3 billion assets under management is what I worked for. And I would say one thing they can do is where they spend their money on people, talent, leadership, instead of potentially just hiring a recruitment firm, is try and find someone that can be your in-house partner on everything people. Because it's always about people. I mean, if we don't understand people, we don't understand business, right? I think this is Simon Sinek's famous quote. You don't
yeah,
understand people, you don't understand business. And that's truth. So, this is where we can, where I would say private equities of smaller scale can work with companies like ours or the like to have a partner on your side to guide you really through what do you want, what is important to you from a leadership team, organizational culture, what is your investment strategy, How does it create welfare in the world? How does that meet the needs of your stakeholders? And take that top-down view and really filter it into very aligned decisions on management recruitment, what targeted leadership development interventions that need to be made, et cetera, across the entire portfolio lifecycle. And if you actually amortize that cost over several years and a big chunk of a portfolio, it really makes sense given if we believe that hypothesis that if you understand people, you understand business, right?
Yeah, completely. And do you think, a way a lot of things are approached are around having almost a playbook? This is our playbook for these, for sales or marketing through the whole life cycle. Do you think in terms of having there's sort of a magic formula for talent strategies that can be seen as a playbook, or do you think actually the individual cultures and talent means it has to be more sort of adaptable and flexible or customized per organization?
I think a playbook is always good. Back to storytelling. If we want private equities to understand what value partners like People Edge can add, and it's very different than a McKinsey, it's very different than a traditional recruitment firm. You're working with an organization that has experience of running larger businesses and organizations, has a strategic lens, has multiple lenses actually like an entrepreneur, but its ultimate focus is people and leadership. And that is very unique in its sense because those types of advisors or partners don't exist too often, and we don't bring them in too often.
Yeah.
I mean, I know this from my time at Rolls-Royce. You hire the big top 5 consulting firms to sign off a big 10-year strategy. You ask for their help in implementing that through that period, etc. But when it comes to people, that's often it happens somewhere in that cloud. But that laser focus on people is what I think we can bring out. And back to the playbook, yes, I think a playbook is good in terms of the story. How has private equity evolved? Why is leadership development so important? How can a company like TPC Leadership partner with private equities from the very early days to the investment, through the investment cycle and exit and even beyond? Whatever else then happens below the headline in terms of how to intervene in certain industries, markets, say AI-driven interventions on leadership, that can be tailored to every single industry, I believe. But an overall playbook of what kind of support approach and why it matters given the times we're in and where we came from, actually, that I would say would be a very valuable story to tell.
Excellent, thank you. And finally, let's look forward. So let's pretend we're a partner in a PE firm that maybe doesn't have that much knowledge around people strategies, around talent, et cetera. What do you think's the thing that they should be striving for over the next few years that will really make the difference for them as a firm and for the value they create for their investors and stakeholders?
Really put people first and no longer slogans for the sake of slogans.
Yeah.
Think I would say I'm not now doing an emotional storyline here just for the sake of it. Just if anyone looks out the window or just experience your environment, we are at a very critical juncture. I'm going to take this very broad now as humanity. And I don't think we have the luxury anymore to put the human side of things on the back seat. Therefore, people, leadership, and the human element of work, I would recommend any leader, any private equity, because private equities have leverage. They have leverage. By leverage, I mean they have the ability to make a big impact in the world and make changes. And when you have that, it's a privilege. How are you using that leverage you have to help welfare more broadly? Starting with your own employees, starting with your customers, starting with your stakeholders, starting with the environment. Therefore, it is really about the human side of things. How do we maintain that? How do we turn how we approach the human side of business into our unique competitive advantage while not losing sight of the hard, tangible innovation, technology, competition in the market, operational expansion, you name it. To me, the future leader is someone who can who will not trade this for the other while
Sure.
still keeping the ship on track, on board, and going for playing really the long game. That to me is where leadership goes. And obviously, when we say long game, this is where, again, how do you manage that with the private equity mindset of a 3 to 5 year window, balancing that as well?
Sure. And just building on that, I'm going to bring up the dreaded AI. AI, people,
I'm not an expert in that.
well, no, I'm not sure that many people are really. But AI, in terms of its effect on people, there's a lot of talk about the bubble. There's a lot of talk about the bubble about to burst. It may or may not do, but clearly it's at the front of everyone's minds. Again, you talked about people and people first. How can you help people working within PA environments to really work with AI and get the power out of AI without losing that kind of human connection that we've talked about so much?
I have some friends and I have some people in my network who are really at the forefront of AI right now, helping companies actually integrate AI into the organization. And the first thing is we need to shift away from human versus AI and just human and AI. The reality is AI is there as a tool for us to use to make us even better. Back to positive psychology. We can start
Exactly.
with the very opposite mindset, and you already, just by not doing anything, destroy psychological safety, create fear, create scarcity mindset, etc. Or you shift the other way and create an abundance mindset, positive psychology mindset. Now, obviously, important is that we don't enter la la land. AI is powerful. For me, an amazing leader in the world of AI would be someone that finally breaks the chain, in the sense that this is not the first time we're going through a big revolution. What have we learned in the past? And what small changes can we make now to not repeat the mistakes of the past? For example, like blowing it out of proportion right now. The fear of missing out that everyone's running around with around AI. The data privacy and breaches, and I mean, you've seen the news around, young teenagers using AI as a mentor or psychologist, and then that leading them to horrible things like harming themselves. A good leader in AI is someone who brings it in with, I would say, positive psychology, pragmatically, with small steps, 1% at a time, while I would say not losing, keeping history repeats itself in the back of their mind to not repeat it again.
Yeah, absolutely. Thank you, Ümit. Very wise
That's
words.
as much as I can say on AI right now.
No, that's very good. That's very good. Listen, that's been a really insightful discussion.
Okay.
I could talk to you for days and weeks, but I'm not sure anybody would necessarily be listening or watching for that long. So,
I appreciate it.
But I'm sure we'll come back to it. But thanks for being the first guest on People Pulse, where we're talking about private equity and the challenges around talent and within private equity and how we can help them drive more value through that. But thank you so much for your time, Ümit, and I'm sure we'll speak again soon.
Thanks, David. Thank you for your powerful questions and for listening.
Thank you.